still waiting for that first trade. You can see there, it says unchanged. What that really means is that we haven't had a trade yet. At $38, that was the price target. That was the price set when they sold the IPO yesterday. Waiting for trading, almost 11:30 now. Haven't had a trade. Simon Constable, come on. Come on. When does this become a black eye?
When is it? I think it's a bruised nose right now.
Bruised nose?
It's a bruised nose. Now what it becomes a black eye is if they don't get this done today, then it will be a black eye.
Oh, right. If they don't get it done today, it's more than a black eye.
It's maybe
it's a broken kneecap.
Broken kneecap, maybe.
No, but really, look, this is NASDAQ. This is this is not a minor exchange. This is a major exchange.
But this company is used to black eyes. Let's look at this company. Okay, running up to the IPO, a big advertiser, a giant advertiser, General Motors, my former employer, says, oh, you know what, we don't think Facebook ads actually work, so we're not going to buy anymore. We're not going to buy anymore. And that's got to be a black eye to major advertisers. Other black eyes for this company, various privacy hiccups, or privacy hiccups as other people say, over time, and they just keep making, PR blunders. And it doesn't seem to stop them.
I'm being told now at 11:30 we're expected. In about 30 seconds we're expecting the first trade on Facebook. I'm talking about NASDAQ. I think there's a little bit of a black eye for NASDAQ. I think it's a little bit embarrassing that they couldn't get this thing done sooner.
Well, maybe they're going to blame
They only had
Facebook.
Forever to plan for it.
Well, maybe they're just going to blame
And they tested their systems a lot in the last week or so to make sure they were ready for this.
How much of this is to do with retail involvement here? Because a lot of stocks don't get a lot of retail interest, and I've got to believe that is part of it.
They weren't ready for that?
Well, maybe if they haven't done it.
And I'm not asking you to defend NASDAQ.
I don't know, but I think when you've got a domination of institutional investors who know how this is done and have done it many, many, many times, that's different from when you start getting an absolute flood of retail investors in who maybe have never bought a stock before.
Right. But here they're on Facebook. They know it. They use it. They think, I want to get on Facebook. It sounds interesting.
And you go back to Peter Lynch. Beating.
All right, and here it is. We've started trading on Facebook. You can see that up 13%, $43 right there. That's about what we thought. So isn't that interesting? You saw a run up right to there, 43 now sitting there. That is going to move a lot today.
So, Paul, at what point, when you see a run up like that, do you say the bankers mispriced it? What is that amount that's too much of a run up? Is it 50% clearly too much, right? If it's 2%, is that too little? I mean, what's the right level?
That gets into the whole thing about where they priced this, what they expected, because we know in the private market it was trading around there. It was trading around $43, $44. They knew that, right?
Yeah.
So they priced it at 38. They tried to get it a little higher than 38, got some pushback on it, brought it down to 38. They get an 11, 13% pop. That doesn't sound too bad to me.
It's not too bad. If that goes up to 25%, then that's a lot of money left on the table by the bankers for the founders and the original investors.
Representing and shepherding through this whole thing. Yeah, I don't think anyone's going to be too upset at an 11%.
That's not so bad at all, and of course a lot of those holders still holding stock now. They didn't sell everything out, so what they're losing on that little sort of 11%, they're gaining on other parts of their holdings.
Let's talk about some of those the Facebook millionaires. Let's bring in Bill Harris, who is President, CEO, Personal Capital. We've had you on the show before. Bill, in San Francisco, going to talk about what those Facebook millionaires should be doing with their money, all the money they're getting right now.
Well, newly minted Facebook millionaires should be doing nothing right now. They should be taking a deep breath and starting to think about their future, and not just the future in a matter of days and weeks, but months, years, even decades.
Now, okay, so look, they have a lot more money than they had a week ago. What should they do with the money? Should they really just sit there for a few months and just kind of wait? Is this kind of thing where you should immediately get on the phone with your advisor, start making some plans?
Oh, you absolutely should get on the phone with the advisor or find an advisor and figure out. So the first and most important thing that you must do, and most people do not do, is make a plan. Gather your information, think about your financial life for more than a couple of weeks, and really figure out what you need and how to plan for that. So number one, absolutely plan. Number two, for almost everyone who has had not much wealth and all of a sudden has a sudden windfall, diversify. People who are working at Facebook not only have highly concentrated positions in an individual security, but also their entire lives are concentrated in the tech sector. They're working for that same company. They're living in Silicon Valley. Their houses, if they have them, are in the Silicon Valley economy as well. Diversify. Multiple asset classes, multiple geographies, get an asset allocation that makes sense. And and insulates you a little bit from the ups and downs of the tech market.
What about the problem of suddenly finding you have an absolute ton of new friends who've got some crazy business ideas for you and say, oh, could you just invest, 100,000, 10,000, 50,000, whatever it is in my
One of
venture?
them might not be crazy. You don't know.
I mean, some of them. I mean, what should people be doing? These folks who've suddenly got rich. What should they do if they're approached by that? I know. I'll give you the answer my friend James Altucher says, which is basically he says, tell everyone that you've got it in a 1-year CD for the time being. You can't possibly discuss it until the 1 year is up.
I think that's a great idea. I think first of all, investing in venture capital startups or doing an angel investment round or anything of that nature is a very difficult, low odds kind of thing to do. And the people who do it well have been doing it for a long time. And I don't think that you should assume that because you happen to work in a tech company, you have a special experience in terms of trying to separate the gems from the ones that won't go that way.
Yeah.
And so, yes, absolutely. There may be one or perhaps two of these things that because you know people and you trust them and you understand the business that they're going into, that you can be helpful with. But even that is something that is not to be figured out over the next months. Figure that out over the next couple of years.
Hey, Bill, and you can see Facebook shares now, they're trading actually below where the first trades came across, so up 6.7% there. That's below where they opened. Bill, let me ask you this about taxes real quick. What's the best tax strategy? Is it necessarily renouncing your U.S. citizenship? Is that the way to go?
I don't think renouncing one's U.S. citizenship is a good strategy on any level. But the taxes, thinking about taxes is incredibly important. It's incredibly important for almost any investor. And most investors and most financial advisors don't even think about taxes. They think about gross return, not net return. And the net is what you have to put in the bank, and that's what counts. Especially in the instance of people who have stock options or highly appreciated shares or RSUs, and many of the Facebook people have RSUs rather than straight options. Tax implications are complicated at first, and then secondly, crucial. The difference between, for instance, long-term capital gain treatment and ordinary income treatment on appreciated stock that you've got in Facebook is 20% of additional taxes. So if you've got $1 million gain, if that particular decision swings wrong for you, that's an additional $200,000 in taxes that comes away before you get any cash at all.